Oh, we're live.
All right, we are live. Welcome back to another live Stock Talk episode. Welcome back to the channel. We've got Andrew with us today. How's it going, man?
Yeah, it's going good, man. How about yourself?
Good. Got some really nice weather here. It's like sunny and 80, so just enjoying it. Been doing some housework and whatnot. So yeah, it's been
That's
good.
nice. We're about to burn up alive down here. I think it's supposed to be 112 degrees tomorrow. So,
Are you in Texas?
I'm technically in New Mexico, right outside of Texas.
Oh yeah, so
So
still in the death zone, right?
exactly. We're not Phoenix though. There's
Oh
actually
yeah,
like
man.
there's actually a bunch of people out here, and I don't know why people want to do this. They're like intentionally driving to Death Valley because Death Valley is supposed to be in like the 130s because they want to experience like the hottest day like ever reliably recorded.
Why?
I know. I'm like, well, the other thing too is I said like, you realize if your car breaks, if your car dies, you probably die too.
You are dead. Like literally.
Have fun, man. And so,
Dude, oh man, I don't get that. I was on vacation like a while ago. I mean, this was a long time ago, 12 years or something like that. But we wanted to hike this spot in Israel, and it was like 118. And I went through my entire like camel pack, and I still don't think I peed for like 2 days because you're just sweating everything out.
Everything just sweats out exactly. Oh my
It was
gosh.
so bad. And then I learned that the part of the like military training there, I guess that wasn't even the hot part of the year. They apparently do that with like 100-pound packs in the hottest month of the year when it's usually between 130 to 140. And I was like,
They must
nah.
have like medical staff on hand because like maybe people
I
are just
don't
gonna
know,
get
man.
heat stroke and like, oh my
Yeah,
gosh.
no. Like they're
So-
like drinking like a gallon every like hour or something like that. I'm like, how? But I don't know. People like when you're like living in it and you grow up in it, you're just acclimated better. But still, I'm just like, no, like
No,
that
that is true
115 was good enough for me.
because I grew up in Michigan, and it's so funny. So like this past weekend, my wife and her family were like, we're gonna go camping at the lake here. I'm like, it's supposed to be like 105 a weekend. What are you talking about? Oh, it's fine. Like we'll be at the lake. Like,
We're gonna
it
be in the
actually,
water all day.
ironically, like it actually was pretty good because it actually rained really hard at one point and actually like cooled it off like that night. So it actually was pretty nice.
That's cool.
But yeah.
Nice,
So,
man.
anyways.
All right, so I guess we are going to be talking about I think Paylocity, right? This is one that you've been starting to check out recently, and I know you mentioned it briefly on Kingdom Stream, and we briefly talked about Paylocity and Paycom ADP, but didn't really dive too deep into it. So I thought it'd be a good topic for today, and we can just kind of go through it, maybe do some comparisons, eval, and just see what happens.
So, and I'll just kind of rehash like how I got interested in these companies because I always think that's like it's interesting to find out how people find out about companies because that's one of the things we always try to do is like how do you find good companies. So this one was just happenstance that I said I need a new payroll system because I'm currently using Paycor and they're awful. They like mess up all our tax filings. They somehow like just never send W-2s to the right place. They sent the IRS wrong addresses for all of our businesses. So like just like everything was like wrong. Like I literally had someone reach out to me yesterday and was like, hey, we didn't get the IRS is sending us refund checks for one of their programs. Like we had to like reapply for it basically because Paycor put the wrong address in for us. Like, oh, of course. Oh my gosh. So in going through that, ADP, Paylocity, Paycom, I took went with all of them. ADP is just like they're a whole different animal. I mean, if you look at simply on market cap, I think ADP is in the 200 billion. No, they're only at 100 billion. So not that
97 or something like that. Yeah.
And then you have Paycom in like 20 billion and Paylocity at like 10 billion. So kind of went through the pitches and had them met with all their salespeople and everything. And it was interesting to just get the different perspectives on these companies. And we also like took pitches or bids, I should say, from some smaller players, but they're private, not publicly traded, so it's irrelevant for this discussion. Yeah, it's ADP. And what's a good thing to kind of, and I actually think Kingdom of Finance pulled this up, is and it's a real succinct, but I think it's a good, is investor deck is the deck for Paylocity. So what I'll do is, if you want me to, I can share my screen.
Yeah, this one right here.
You got up? Yep, right there. Perfect.
Boom. Got it. We're ready, man.
So he's on point. He's like reading my mind. He's like,
boom,
already there. So you can see, like, one of the things I want to point out is they grew stay on that slide real quick, because one of the things is about forward projections is they grew 38% for like the last, or 30+% in the last 2 years. Obviously, like, COVID's kind of made everything funky. So the CEO said they'll return to like 20% plus top line growth. We'll see what happens, but I do think that on the sell side, analyst estimates are very low, because they have them like 20% next year, 18 after that, and kind of falling down rapidly from there to like mid-teens. Whereas the CEO,
so they kind of have them going through like a pretty big normalization off of COVID, and still growing, but at a way smaller rate than previously.
For sure. And I still think, even if I'm sure they will normalize to mid-20s% top line growth, which is still really good, especially at their current valuation.
Yeah.
So and Paycom is growing really fast too. Like, we can a lot of the stuff that we can say for Paylocity, you can say for Paycom. Paylocity is just this investor price is a lot better than what Paycom has, and it's easier to go through.
Gotcha.
And I'll kind of give on the customer side my different impressions between Paycom and Paylocity, and what the differences between them. But anyway, so I thought that was interesting. And if you go down to the TAM, everyone's favorite metric in investing, right? It's the most important one. Oh. So it's the next slide. They're a payroll processing, or like they're really an HR. If you talk to them, they'll say like, we're actually like an HR resource company or HR management. Exactly. Payroll, HR, everything. It's super, what's the word? Not segregated. It's
segmented.
Segmented. That's what I'm looking for. Thank you. And even on ADP's investor relations, in their investor pres, let me pull this up real quick. Like, even they're saying, oh yeah, it's super segmented. We're like 5% of the market or something like that.
Yeah.
And so it's not just Paylocity, saying that themselves. It's across the board, because what you have is you have a lot of companies do it internally, and then setting up a payroll system isn't that hard necessarily. I mean, you just got, how do we automate processing checks for you, and all that is the original.
Yeah.
The way these guys differentiate themselves, though, is that they have things like expense management. They have human resource management, so you can document, if there's performance reviews, if there's any kind of write-ups, things like that. All that can fit into their system. Like, so you take all these different HR functions and you just fit them into the Paylocity, Paycom, ADP. All of them have that kind of. And
okay. Yeah, that's what I was going to ask. Mm-hmm. I was going to say with how segmented the market is, I would assume that like all of these players kind of have their niche, mm-hmm. and most likely it's just whatever companies like value the most when it comes to that niche fulfilling their needs. Yeah. It's probably going to be what gets them.
So I'm going to go a little bit into the sales pitches I heard from each of these guys. So Paycom, in my opinion, actually has the most impressive software. The problem with Paycom is they know they do, and they're like 3.5 times as expensive as the next guy. So it's how Paycom works, and I know like we're jumping back and forth between them, but it's kind of because this is another one I think is a solid investment too. But the way Paycom works is they have this product called Betty. And basically how it works is, as an employee, I have to approve my payroll every week, which initially sounds like a big pain. But in reality, what that does is it saves administrators time, because if I'm an employee, I'm going to look at my paycheck a lot more closely than if I'm just the administrator who's got to process payroll for 1,000 employees every week
Yeah.
or every other week. So I'm going to look, is my 401k match right? Is the changes that I made, my withholdings right? And so they do that up front. So it actually, on the back end for the administrator, it's really easy for you to just go ahead and approve things because most of that stuff's already been done kind of by the employees. So it's, in my opinion, very. Oh, go ahead. You're gonna say something.
Oh, I was gonna say now if like it sounds like a good idea, but then like I'm just curious how easy it is to retroactively fix something if an employee like discovers something after like 3 months and they're like, oh, what the heck? I was underpaid or like I wasn't getting my match or something like this for the last like 3 months. Do you have any insight into that?
I mean, it's kind of the same for all of them because no matter what, like if and actually I would say in that case, Paycom is in some ways from like I guess a legal perspective, if you're worried about that, the best because it's like, well, you signed off on it. But but I mean yeah, exactly. Got
Sorry,
that
man.
but really, I mean, in any of them, like as I've done this, is this happened a bunch of times with Paycor, you can go back and retroactively pay, retroactively match, do all of that stuff.
Yeah.
It's not hard to do. It's a very
Okay.
simple process for any of them to go back and say, oh, my 401k match is supposed to be this percentage, and for some reason it didn't happen. Oh, okay, no problem. We'll do that. Hey, I was supposed to go from 18.50 to 20 an hour. Okay, well then we can just go back in the system, say pay them 150 an hour for 160 hours, that we messed up or whatever. So it's a pretty easy process, honestly, to catch those and fix once they get caught to fix them.
Yeah.
You don't want to have those, but they happen. It's gonna happen.
Inevitable.
Oh yeah, and so Paycom also has a lot of other things that are cool. So Paycom wants to be like a mobile first company almost. So like you can almost, as a payroll admin, I think you can almost run payroll off of your phone.
Okay.
Which is like, I guess,
Yeah,
kind of cool.
I kind of I looked into it a little bit and it seemed like that's what they're really pushing. Like all you needed essentially was your phone and an app.
Mm-hmm.
And that was it. Like very, very simple and dumbed down, which seems like it would be really good for maybe like I don't know, maybe the smaller smaller businesses or enterprises. Maybe not something huge, but a lot of SMBs would probably find that really, really useful.
Maybe the thing about like I think it's cool, especially for the employees, but on the payroll admin side, I think it's kind of pointless because like you're gonna be sitting at a computer anyways. But I guess it's cool. I guess if you're on vacation, you're like, oh shoot, I forgot something. Let me just pull up my phone. In those like niche situations, it's nice. But once again, as a potential customer, do I really think that's worth 3.5 times, for the pay for that? I don't know. So like, but if you look at Paycom's gross margins, that's why they're so dang good. They know that they have like really good software and they charge a lot for it.
Gotcha.
They have some really cool products on top of that. So like if you're a company with a lot of drivers or like people that drive a lot and need to get reimbursed for like mileage or something, you literally can just hit a button on the app and it's like, I'm starting to drive now. And when you're done driving, you hit the button and it's done and it automatically goes and gets reimbursed in your paycheck. Little things like that. Like Paycom's got really cool software. It's just like in my industry, I don't think it's worth it for me to be like, I can't fork up an extra $140,000 just for like those nice things. If you're at a bigger company, $140,000, that's like one engineer, but or half an engineer.
Yeah, I know.
Depending on if you're in Silicon Valley or not. But
so what you're saying is they have pricing power and they should be in the pricing power ETF.
They should be in the pricing power ETF. That is right. Special, and that's probably why larger businesses are more like Paycom is more than Paylocity because Paylocity is more in SMBs than, I mean, they obviously all have large clients, small clients, but Paylocity is more in SMBs and Paycom's more mid to large. And ADP is like mostly large. Okay. It's really funny. You can tell too how much like they want you. Like ADP met with me once, and I don't know if I've heard from them again. They're like, "Oh yeah, it'd be nice to have you, but like we don't really care." And then Paycom and Paylocity have been very like, and the other players that are smaller have been very insistent on like keeping in touch. How's it going and everything. It's just funny.
Interesting.
Yeah, and this is just showing the competitive landscape. And I think they even say here like Paycom average client size larger than ours. See them in certain clients, but generally all
they kind of ADP Workday. all these?
Workday and
As-
Ceridian, I don't really see how they're like. I guess you would include them in here on the like the onboarding like because you through Paylocity can do like your posting resumes to Indeed and stuff like that. I mean, it's not like their core product, but it's an add-on you can have, and so I guess that's where they kind of like overlap a little bit.
Throw them on there.
Yeah, I guess yeah, because I saw it and I was like, I don't really think, and then and they even kind of have like a line saying like they're not really over ADP and Paychecks. Paycor's average client size is smaller. I see a lot of problems for Paycor. I think a good long short is if you want to do a pair trade, it's like long either Paycom or Paylocity and short Paycor. But I also don't like
You
doing
said
that.
Paycor, and I was thinking Paycom, and did all of these are just like Paylocity,
Paychecks,
Paycor,
yeah,
Paycom, Pay
yeah,
checks?
yeah,
Yeah, like what
yeah.
the heck? Don't get them mixed up.
No, it's not. It's like, oh,
Like,
you're gonna think like you're like I got Paylocity, and you look like, oh shoot, I got Paychecks.
Paychecks or Paycor.
Yeah,
Oh
and
man,
then there's ADP,
which is like huge. Yeah,
but it's just like a completely separate name. It's like Paycom,
yeah.
ADP. So I mean, that's kind of that's what I was gonna say about Paylocity. Is the other thing is Paylocity has more of a relationship with your client. So like Paycom, the other thing is they focus very much on having super solid, like they have representatives there to assist you when there's problems, but their primary focus is having such good systems that you don't have to go to that step. Like they don't they don't rely on the customer service as much as our systems are awesome. Like there's a customer service element, but it's not like their primary focus.
Yeah.
Paylocity is like our systems are probably average to above average for like these kind of companies, but their customer service is really good and they're big enough that they know everything. So like I'm in a very niche market. They literally have like 30 other organizations that are in my market, and they literally have a designated team that does just customer support just for those niche 30 40 customers, because like we have really specific tax requirements and tax reporting things and everything. And so they're kind of like, oh yeah, we're gonna have this. And when I asked Paycom about it, they're like, oh yeah, like we customer service, everyone talks about it, but everyone's gonna say their customer service is great, and ours is too. And I was like, oh yeah, like you can kind of
Yeah.
feel where the
You have to say that. Like,
yeah.
did you by chance, I know I've done this with some, like if I'm comparing different
Mm.
services or vendors, but did you by chance get any like, I don't know, independent parties that use the different uh,
So
services to get their recommendation on things?
yeah, so the lucky thing is with Paylocity, I know some of the because they showed me the organizations that use them that are in my industry, and I know those people. So I
Oh,
called them just
okay.
to say like, "Hey, you happy with them?" Yeah, they work great. Like if they have a problem, if
Yeah.
we have a problem, they'll come out and meet with us and stuff. Paycom, I have to go through it because I know a couple that have them. I just haven't called them yet. I will say like Paycom really wants to sell to us really bad. The sales guy, he like referred me to this guy that's been there for like 15 years, and that guy called me in my cell from his cell. And then he was also like, "Oh, by the way, I'm going to text you a bunch of numbers. Just feel free to call them. They're like references." And I was like, "Oh my
Oh
gosh."
my gosh.
Yeah.
So
But
yeah, they're
but
not shy about references and just bombarding you with
no,
stuff.
and to be fair with Paycom makes sense because like every sale Paycom makes is almost like 4 sales for Paylocity.
Yeah.
So it's
And
like,
is that just because their margins are so much better?
well, it's like I said, they charge
Well, and
200,000. Yeah.
yeah, and
So
yeah,
if you
and the
go to the
price.
gross, if you go to the gross margins, no one has gross margins like Paycom. So Paycom's is like 87.5 and Paylocity's is like 70, which 70 is still good. That's like a good gross margin. But 87.5 is nuts. Like it's hard to
Yeah.
find in software better margins than that. Now, I will say
Yeah. Yeah.
yeah,
Go ahead.
their free cash flow margins like aren't as impressive compare like on a comparison basis. Like they kind of somewhat normalize, and part of that's because they do a lot of because Paycom. Another interesting thing about them, you might like this, you might not like this. They've never in the history of the organization made a single acquisition, which is in making acquisitions is very common in payroll, because in payroll, we do payroll, but we can acquire this company that does, let's say, like HR management for your employees, like filing I-9s
Yeah.
or stuff. So
tuck-in acquisitions would be
exactly
really easy in a market that is that segmented.
right,
But that can prevent or present a lot of challenges as like, can they actually integrate well? A lot of
exactly,
companies don't, and it becomes
yeah,
a disaster, and they're just burning capital. So
exactly.
that's very interesting, because I personally am usually more of a fan of organic growth
Mhm.
than acquisition-based growth, unless the company has a really good track record of like tuck-in acquisitions that are really showing up on like a per share basis.
Exactly. And so it's just I actually want to look like on a goodwill basis the difference between these companies. I think let's see. Yeah, I mean Paylocity that's half the size has twice the amount of goodwill. So
Yeah.
now I'm wondering what they have how Paycom even has goodwill in their books. That's actually interesting to me. But I don't know. I'd have to look at that. Um but yeah, they're very proud too of the fact that they've never made an acquisition. Like they say that a lot in their sales pitch. They're like, oh yeah, we build everything, which, like I said, it's cool. But I think if you trust the management team and you think they're good at tucking acquisitions, I personally think that's actually more attractive than like going through building everything yourself necessarily. But
Yeah.
um,
It depends. Especially in the tech space. It's just it really depends. Because if it's small enough and they do something niche really well, and you have a really good engineering team that is able to like integrate that,
mhm,
um, it can definitely be really beneficial in the software space and something like this, I
yeah,
would think. Um, but yeah, like I said, it's kind of it's one of those things where sometimes you see those companies that have really good growth, and you realize it's just been from acquisitions like the last
yeah.
8 years. It's just
They're
like
like
they're still crap.
they're like growing, and then you're like, wait a minute, why is there no free cash flow? And then you look at like the
Yeah,
investing.
yeah.
You're like, oh, acquisitions everywhere. Yeah, and so I
Yep.
mean, and oh, the other thing that's really cool about both of these companies, and this is the thing, so neither of them have like any debt. So the cool thing about if you're a well-run payroll company, they don't take on a lot of debt because they don't need to.
Yeah.
In fact, they're on the opposite end. So when you get a payroll company, as a payroll company, get a client, there's going to be times that you're going to have float for them when they're that like it's only a few days at a time, but if you have billions and billions in money running through your payroll system, it matters. So they have a float from the time between I send money to them to the time it hits my bank account. So it's like the company, I send you money, and then as the employee, I usually see that in my bank account like 2 to 4 days later from when it gets sent from the
Yeah.
company. So Paylocity has, as an example, like 2.5, 2.6 billion of float that they get about 400 bips on. So like they're getting 4% on 2.5 billion that they get for free.
Yeah.
Um, and so like,
So, and
go ahead.
I was gonna say, and the revenue structure of these guys, I'm guessing it's more like a software as a service type revenue
Mm-hmm.
stream. Is it kind of
Oh yeah.
monthly / yearly contracts, like
Oh yeah.
just cash coming
So
in?
yeah. So it's. I don't know if you technically just have a monthly contract, like you pay as you go every month, and people can switch off whenever they want. But like switching out of a payroll provider, it is a process. Like you can't be done overnight, but it is basically SaaS. I mean, you.
Yeah.
So for example, for us, it's if we did it with Paylocity, it's like $200 per employee per month. Or no, I'm sorry, per employee per year, I think. And so basically, like that's kind of the
Okay.
rate that it comes out to. And so for every employee we have, we pay them on a monthly basis. And then there's things like they file W-2s for us, we pay a fee. They do our ACA compliance, we do a fee. There's like a list of other things that they do. Um,
Okay.
And so
So
it
there might
is
be
recurring.
certain quarters that have like an increased amount of revenue due to, you know, tax filings or something like that.
Yeah, there is. In fact, these companies will break out on their financials like recurring revenue growth and just revenue growth.
Okay.
So, and usually it's pretty close. Um, you also like usually pay a one-time fee for the setup, which they'd make I think a nice little bit of money on. So like for us, our annual pay for Paylocity would be 65,000 if we decided to go with them. Then you also have a one-time setup fee of 14,000 for like the implementation, integration, all of that. So they make it on that end too. And then like you said, you have tax filing is always going to be good for them. 941 amending, things like that. So
Yeah.
but the
And I
core of their
mean,
business is recurring.
you can see that they've had decent gross profit margin and operating profit and net profit margin expansion over the last like 10 years. Just as
Mm-hmm.
they've grown, their margins have continued to expand. And even though they've done those acquisitions, per share growth has been really, really good over the last
Exactly.
10 years. So
And
it's been pretty decent. And I don't
and
even think I'm not I don't think they're really diluting, are they? Or let's see.
I don't think so
A
because the
little bit here
CEO
and there, it
owns.
looks like.
It's very little though because the CEO owns 20% of this company. So like I don't think he wants to
Yeah.
get diluted. Same thing with Paycom. The CEO
I think
owns 15%.
Yeah,
So
there might have been some dilution like pre 2017, but over the last 5 years, it's very, very low. If anything,
right,
pretty much looks like stock based compensation,
right, and
probably.
that's really because like, and I know Paycom has incentive structure set up for its CEO for I think actually one of the marks is like 420, which would be funny if they hit that. I think it's that one's that and one's like 1,000 in a certain year time frame. But if he does that, he gets like another 1 point. You as a shareholder get diluted 1.5%. But like I think if you get to those marks, then as a shareholder you're still happy, even if you get diluted slightly. So it doesn't really
Oh yeah,
matter.
oh yeah.
Um,
No,
but
small
yeah,
amounts of dilution isn't that bad as long as it's being accretive, right?
yeah,
It's the it's the times where we have to dilute to stay in business that you want to kind of
yeah.
avoid
It's like, oh yeah, our
that.
margins are all negative. We can't find cash, so we're just gonna like
Yeah.
sell in the market. Yeah. So I really like the businesses. What was I gonna say too about that? Oh yeah, kind of to your point. I see them growing top line at like mid 20s, and then you're gonna see margin expansion.
Yeah.
So I feel like you're gonna be seeing. I don't think this is crazy, like 30 like to 40% EPS growth for the next couple of years. And so when you
Okay.
stack that on top of a valuation of like 40x PE, 50x, 55x free cash flow, like that sounds high. Although compared to other tech right now, it's not high at all. But like it sounds high to what I'm used to getting. Um, but just as a simple example, so like Paylocity right now, they're at like $225 just for a round number, and by I want to say they're saying by I think like 2025, like yeah, it's saying like let's say 30% EPS growth at least into that point is what sell side's projecting. Unlike
Okay.
what I say is like pretty conservative top line numbers too.
Yeah.
Um, so I don't
And
know.
that makes sense if they continue to expand at their rate and gain a little bit more
Mm.
efficiency as they grow, you know, their gross margins will increase a little bit, but yeah, it can have a really big effect on the bottom line.
Yeah. Oh yeah. And
As far as the bottom line margins going forward.
do
Let's
you
see.
have Ticker by the way? If you don't, I'll share my screen because I want to show something too.
I don't have it up right now. I don't have premium, so you can go ahead and share
Okay.
your screen.
Because the other thing I wanted to share is let's see, share screen, entire screen, and this is the valuation of both of these companies. And like, in I mean, and I think I told you I bought them a little bit ago when it was almost like I want to say they were I don't know over here, but like they were. I mean, you were looking at almost even after this run up, you're seeing almost like all time lows in valuation relative to where these companies have been.
Hmm.
COVID got them pretty close to that. The COVID like sell off, but outside of that, and something over here, this is 2018. I'm not sure if that was just the growth scare, but I wonder too with ADP if they follow that. ADP could be its own beast, but so like the thing too is you're picking up at like I think relatively low valuations compared to what they've been. Yeah, ADP so ADP stays around like 30. So it looks like maybe 25, 30. I mean, they have very small growth and everything, but then if you just have to take that into consideration when you look at these companies, like that might be where they end eventually, but I think it's going to be off the back of growing your earnings at 30 to 40% a year. And, eventually, as your growth slows, you'll get closer to like an ADP level.
Yeah. That's the thing that I always have a hard time with. I'll share mine.
Yeah.
On these is that I usually like to project like a more reasonable like 5-year PE at the end of the evaluation, just because I think eventually, like as their growth slows, like the multiple should decrease as they scale up and they have like less growth. But it does seem like a lot of times the market is kind of pricing these smaller companies with decent growth on the bottom line. They're almost pricing them in for like really high multiples for like years and years and years. Yeah. And I'm like, I don't know if I can swallow pain what I think is going to potentially be a really high multiple in 5 years and like have to wait till year 10 to where I'm like, okay, it kind of makes me feel a little bit better about it. But yeah, because let's see. I mean, so let's just do like this quick.
In my opinion, a 40x PE like for a company that's going fast is not unreasonable. Like I can't.
Yeah.
For so many of these tech companies right now, the PEs on them are just like, oh my goodness.
Yeah. No, and especially something of this size. Now, if they grew into like the size of, well, I mean, I don't think they would ever get to the size of like ADP or something like that. Maybe they would, I don't know. But ADP sitting about like a 100 billion market cap, and Paylocity is around what?
10,
15, 10.
It's like
okay.
I think 12,
12.5 since you bought. No,
yeah,
1 week, man. They're $2 billion more now.
It's insane, like how much companies are running up. I actually want to check like what my buy price was, because like it's not like a flex story, because like the amount that these things have gone up, it's just like I found, I was like, oh, that's really interesting, and then I buy them and it's like, oh wait, it's just running now. Like if you look at a chart of Paylocity in the last like week or two, it's like, wait, what? So my Paylocity cost basis is like 203. So was that 10% ago? So
like one. It's crazy how these like high growth stocks can just run and fall.
Well, and the thing with them is I think they're running because people are becoming less and less certain that there will be a recession, because in a recession these guys will get hurt. Like that's the bear case.
Well,
and I think it's
the like, I mean, inflation expectations are starting to come way down. Everybody's kind of like getting, I don't know, a little bit easier to put on like higher multiples and not worry about 7% inflation forever. And if the market starts pricing in 3% inflation, 2.5% inflation again, look out, it's going to be a fun ride.
Exactly.
It's so, and that's something that I could do even in my case right here is I could essentially say like, okay, like let's remove that and let's say the market's pricing in only 5-year range between 2.3 to 3 maybe on the risk-free rate, and then we get some really, really good multiple expansion going forward after the 5-year target. But man, it's just like it's still hard for me.
What are the estimates that you're putting in? Like, I'm trying to see what so is this Paylocity?
Yeah.
Maybe those numbers are right. Oh, okay, so that's 2020. Okay, so that's not forward projections. Okay, hold on. Let me just.
Yeah. So I'm
Okay, so
basically taking previous projections, and then I'm doing let's see, 22 to 33% bottom line growth. Very minimal dilution, and then pretty much trading right in line with almost the risk-free rate. But even like if we were just going to do a comparative historical analysis on it of what the market has priced in, the market has traded this below the risk-free rate for a long time. So
and just so that I'm clear, so I understand when you're saying at the risk-free rate, that means that so whatever the yield is, that'd be their earnings yield, right? So
yeah.
Okay.
So look at so here we have 10-year treasury over the last 10 years.
Yeah.
Versus the yield multiple of the equity. So obviously, like in this case, the market's pricing in like a lot of growth in the future, right?
Right.
And a very stable business, which makes sense in like a SaaS type of field where the market might be thinking, oh, there's only one way to go from here. As long as you're not losing customers, it's going to be easy to grow that recurring revenue. And recurring revenue and recurring profits is almost always put at a premium. It's one of the things that kind of worries me is not just with this, but with anything. Like you look at like Adobe or a lot of the companies that moved to SaaS services. Like at what point does the market say, oh, that's just the normal?
Yeah. When it's like it's this weird thing that you got to think about, because it's one of so you have like commodities companies. So like right now it's like an energy company that's trading at like a 5 PE. But like we're gonna always need oil. And yeah, the price of oil may go up or down, but like, and it's not SaaS obviously, but like you're also like, well, do we ever think that? But then again, I guess there's like the whole like ESG narrative. But look at that, and then you look at like, and that's why I have problems when I look at like companies like this and compare even to like Murphy's USA Muso, and I'm like, Moose is trading at like a 10x PE, and I feel like people are going to need gas. And they're going to go to gas stations.
Well, and the thing that I just don't understand with, I don't get the viewpoint on Musa where people are like, well, it's subject to like commodity risk, and I'm like, well, is it?
No,
like
it's not
really? It's subject to how efficient can they be in their buying and their turnaround of the commodity. Because they're not going to have the same commodity risk as like a driller or something like that that's actually extracting the commodity. It's more about how efficient they're going to be with being able to turn over the commodity to maintain like a lower risk of commodity prices like really screwing them over. Yeah,
you're exactly right. So I think they do derivatively benefit from a higher price in crude, but their business model is making a margin on the gasoline they sell. And so it's not like if gasoline goes down to $2 a gallon that they're going to have an issue, because they're just going to say, well, that means that they're buying it for 150, or let's say 190 a gallon, and they're selling it to you for $2 a gallon or whatever. So you're exactly right. There is no, I'm sure there is some commodity risk, but the risk is just how efficient are they at buying and selling.
I think the biggest risk is that they misforecast their demand and they overbuy, and then it correlates with the commodity pricing change, and then they're basically hosed for a couple quarters with margins because they did not really estimate their demand well.
And the other thing about, does Murphy's get is that Circle K that does it every week anyways? But like most of these guys too, they're so high volume. Even if they like misforecast, I feel like they move through their volume so quickly. Yeah. It'd have to be a very like quick shift.
Well, and typically they're also putting some type of hedge in place too.
No, that's true.
they're hedging something if it's in like the equities market or something. Like I would highly assume that they have some type of desk that is very concentrated or very focused on hedging the risk of commodity fluctuation.
Well, and not only that, now they're also diversifying into like, because they used to be like those kind of stores where you've been in the gas stations where the station is just like this little brick. Strong man, I went live to sabotage the stream.
You got us, strong man. You got us, man.
We got rude.
We got rude.
Dang, I lost my train. No, so they used to have the gas stations that were more like just one of those like 500 square foot, if that, like little stations where you can't really buy anything in there. And then they're just like raising those and rebuilding them. Yeah, this turned from a Paylocity stream into like a Musa stream because.
Yeah, right. it just happened, guys. I don't know, but 1 second, I will say on the valuation though, if I just like remove my like future bottom line growth estimates and use previous bottom line growth estimates and like go at risk-free rate, it's basically like right in line for like a 15% CAGR, which is kind of interesting. I don't know if I would be like comfortable assigning like, I don't know, like a 40% bottom line growth rate over the next 5 years for Paylocity.
Over 5 years, that's tough.
It's really tough. I mean, because you're like, I don't know, like your EBIT and net income would be in the 720 to 750. That's a lot of growth. That's a lot of growth. So personally, I wouldn't be that bullish on the bottom line growth numbers. I think if I was to try to justify the current valuation, I think I would lean more towards the market is just expecting this to trade at a premium for a very long time.
Well, here's one thing that I have a tough time seeing is the market is saying right now. So as a company gets bigger, your sales force gets bigger, your reference list gets bigger, your name gets out there, people know you more. They did 310 million in sales growth last year, right? Sell side is now saying they're going to go from that to like 240 million. That's a pretty massive drop off. And like maybe that happens, but I feel like a lot of the estimates on the sell side and that's why for me, I think they're going to more normalize around like 25% top line and then have expanding margins, which does change that like projection a lot. Because on my end, I don't see, I think there's a bit of pessimism on the economy baked into these numbers. And sell side is sell side. Like you don't want to base your analysis off, and that's why I'm saying like I think they have that wrong.
I just accidentally banned Fuhat. I'm sorry, bro. If you see this, I'm sorry, man. I meant to just put you in timeout to like slow your roll, bro. But like I I clicked the wrong button. My bad, man. I'll get you back eventually.
Oh man.
I hope you can still watch the stream. Shoot, bro. Sorry. Go ahead.
You're good. I'm just gonna. But no, so like I think in Kingdom said like they're slightly more dilutive. He's obviously referencing between them and Paycom. I think both companies are really solid. And I just like there's a slight valuation, and it's like you said, it's pretty crazy like the difference what in this freaking market that like a week and a half makes, because I bought them a week ago and I could have bought them like a month ago at like 180, but I bought them like a week ago at around 200, and that's like a very different forward looking at 225. I mean, that's a 12%, bump.
Well, and I think it is kind of, have they announced any type of, I don't know, like, have they mentioned like a future buyback plan or anything like that? I mean, they can't buy back much right now because they're only yielding like maybe 1% to the market cap. But like, if they ever did, and we like change the dilution to maybe some potential buybacks over the next 5 years, it would definitely change the valuation a decent amount as well.
I don't know if in the next 5 years it could happen, but I feel like
I wouldn't expect
they're
it,
getting
right?
such
That's
a
why I
good
just
they're getting such a good
yeah
ROIC right now already on their
yeah
investments that I don't think that they want to yet turn it. Like they're still at the point where they can buy additional. On the customer side, I'll tell you right now, they can still expand, and they're planning to expand. What both of these companies actually have done, which I think is very smart, is they've both really been focusing on having payroll for an American company, but you have like foreign employees. So if I have an employee in Mexico and I always have employees in Mexico, like we always have like one or two or three people over there just because of our proximity and everything. You can pay them in their bank account in Mexico in pesos instead of having to like, so they both have that ability, which I think is really cool. And that's, I think, a big game changer for a lot of companies that are looking at offshoring. And then if you look at nearshoring, they obviously win there too. So I think it's kind of win-win on that side for them.
yeah
So I think they're more investing on that side rather than looking at buybacks at this moment.
Yeah, no, I agree. I was just curious because it would make no sense to buy back at this type of valuation if you can get like a 20% ROIC or something like that.
I don't know if you know who Ali
Um,
Aoud is, but no, we are not both. I mean, I don't want to speak for Jesse, but I'm not gay.
I
Well,
was just
actually,
ignoring it, man. And then,
I just
like,
want to know if the answer is yes, will you super chat? Because I mean, I'll say whatever. I don't get it. I think it's funny.
oh man, oh my
So,
gosh.
but no, I'm
No.
totally not. Anyways, so that's like kind of the Paylocity pitch, I guess, or like the discussion on it. Like that's,
Yeah.
I think, super solid, like recurring revenue, strong growth. Payroll's not a industry I don't see being one threatened by AI. So that's good. You can see you guys I made. That's unfortunate, Bacon. But really solid business in terms of like you're going to need payroll companies. In fact, I think we're going to move as the tax code becomes more and more complex. You're not going to want like Nancy, who's doing payroll for 40,000 a year, in the back doing that for you. You want to have like professionals that can do like ACA compliance and things like that.
Yeah.
Because that stuff's a big deal, and if you mess it up, then the IRS is not going to be happy with
all
you.
of these, I know a Paycom or no, is it Paycom or gosh?
Yeah, Paycom.
Yeah,
This is
Paycom.
Paylocity. The other one's Paycom. Yeah.
Yeah, I know. Do you think Paycom is going to be able to keep up their growth rate or grow at like kind of a similar pace as Paylocity? Do you think it'll kind of be like just industry tailwinds long term for most of these guys?
So here's I feel more confident in Paylocity because Paylocity's price point is very similar to a lot of the smaller players that they're eating market share from. The problem with Paycom that I have is how can I they're 3.5 times what you're paying for payroll right now. It's a lot easier as a person that wants to change your payroll system in an SMB to go to your boss and be like, we're going to switch to Paylocity from what we're using, and it's a 10% or 20% even cost increase. With Paycom, I'm going to be going to my boss and going like, hey, we want to switch this new company. They have all these cool little things. Like, oh, cool. How much does it cost? Oh, just like 3.5 times more.
Yeah.
Yeah. So I think with Paycom, it's what you want to do is analyze, because I think Paycom has a super cool opportunity actually in like more labor, like the larger, it's going to sound like a weird thing, but like larger labor intensive businesses with a lot of shift work. I think Paycom for that is like a godsend. And so that's going to be the markets where if you think that they can with like the middle to large businesses, if they can start to eat up share there, where they say, okay, yeah, it's going to cost more, but we're okay eating that for like a better payroll system. Then I see them
The
growing.
first thing I think of like businesses with shift work, I think like retailers and like restaurants and just stuff like that. So that's kind of interesting.
Yeah, and think about that, like, because Paycom, it's like those people are going to look at their shift work and be like, no, I clocked out this time. Okay, this looks right. Okay, approve. And so they're already doing all that. And I think as the administrator in the back end, you're like, oh, this is a godsend.
Yeah. Yeah. Oh, that's cool. No, I've always kind of been interested in like ADP. I just have never like dug into these because I always thought they were just so freaking expensive. And I might have missed my shot on some of these guys, but yeah, it is interesting. I always like trying to get more information from people that like have more experience in an industry that I'm kind of interested in, because I have no expertise in this crap at all.
Yeah, and it's like I said, I'm blessed to be in the position that like literally my day job is looking at and analyzing these. Like right now, part of it's analyzing these guys from a customer perspective. And so I can actually look and say, like, I can see, and if they actually send me their proposals, which they should soon, I can like hopefully just redact some information and like send it to you if you want to see like this is how they're doing a value proposition. Like Paycom's whole thing, and it doesn't, in my opinion, really apply to us. This is why I kind of prefer Paylocity for what I'm doing. Is their whole proposition is like, we'll save you all this time in processing, and by doing that, you'll like save money. Well, I don't have to spend tons of time on processing anyways. The problems I have on my end is on the tax side. And so like, because we, like I said, just have a super unique tax situation with our employees.
Yeah.
So I don't know. I think they're both solid businesses though. And like, if you lean towards Paycom, I get that, especially with their higher margins, but I'm just more of a, for me, I see the Paylocity, thanks Bacon. But I like the pay. I can understand and see the Paylocity model play out better. And I think they also have like, I can see Paylocity can do a point where they're 75% gross margins. And in that scenario, their bottom line is going to really expand. So.
Yeah, so 75% gross margins would be about a 7% margin expansion on the top line, and most of that would, I mean, they could, free cash flow margins up to like maybe 23 or something like that.
Yeah. Oh, can I also say
operating margins up to like 15 or so?
Another really cool thing about both these companies, I forgot to say, Paycom's headquartered in Oklahoma City, and Paylocity's headquartered in somewhere in Illinois. I'm assuming it's right outside of Chicago, but the Schaumburg, Illinois. I like tech companies that aren't headquartered in Silicon Valley, because you just know you're not paying.
Or Seattle.
Oh yeah, or Seattle. So much.
Come on, man. Come on.
I know that's
oh man.
So let me see. It's a suburb of Chicago. So in Chicago, like, but I like these like not super high salary companies or cities too to be headquartered in. It doesn't really like change my, it's not like I'm gonna buy based off that, but it's kind of cool to be like, oh, sweet.
Yeah. Well, it used to be that, these smaller companies or startups or, companies in general wanted to be in these Silicon Valley or Seattle or those type of areas, just for the talent pool. But the remote work story is kind of like ebbed and flowed over the last couple of years. It went from like everyone's remote all the time to like, oh, everybody back in the office. It's going back and forth, but I feel like it's giving some of these smaller players like almost more ammo to just say, yeah, we can do everything remote. We're good with that. Like we can, our talent pool can be everywhere, as long as they're in like the US or our time zone or close to our time zone, and kind of, scout people from like other areas.
Yeah. And I have like personally like, I don't know, position I'm working remote. I don't work remote ever. Like I'm always in the office. It's just who I am. Also, like for my job, I kind of have to be. So I guess that's. But also, like I don't really like working from home as much. Um, but that's just a personal preference. But I also
Yeah.
think like if you're in a company and your company is trying to like drive process improvements, drive change, and all this stuff, then working remote's tough. Like if you're kind of more focused on like let's make sure everything works, we have our processes in place. Working remote's awesome. But
Yeah.
like
Anything that's like R&D heavy, I feel like it'd be very hard to be
agreed.
remote.
Yeah, the
So
amount of times I just walk into like one of my employees' office and I'm like, hey, like we start talking about like this thing and I have to sit down and kind of like walk them through it. I can't imagine like there's some because I let my employees like work from home a couple days a week. And on those days I'm like, we're not even gonna have like a meeting. Like just here's the work you're doing and like we'll
yeah.
talk when you get back the next day because it's just a lot harder. And I think
Yeah.
when I'm breaking up my time it's more efficient. Not that it has anything to do with Paylocity. So anyways, that's that. I don't know if you have any questions. It looks like
No,
I like this model you built, by the way. I think it's really cool.
oh, thank you. Thank you. My brainchild. I started like working on DCF and I was like, I just like my brain doesn't work with this thing. No, I like it though. I actually was just thinking I need to probably start changing my assumptions for the risk-free rate over the 5-year period across my cases because I had been using I think man
You're not
10-year
going to use
treasury.
whack?
Okay, so part of the reason of like I don't know, maybe like part of the reason I just didn't like ever click with like DCFs and stuff was like
Mm,
there were just certain things where I'm like, why is that needed? Like, why is this needed? Like you should just be able to look
so
at like capital they're taking, like capital they're spending, return on the capital. Like
so
no, I don't know.
my opinion on DCFs is like they have a purpose, but also I feel like a lot of things in finance become overcomplicated just to be complicated sometimes. And so like I think there's a lot of things that have a use case in a specific situation. But then what
Yeah,
happens in finance is we go, okay, well, it has like a use here, so we're going to put it on everything in the DCF because then it makes my DCF look more impressive or whatever.
yeah.
In
Got
my
more
opinion,
factors, so it's more accurate.
exactly, which is not always true. But here's what I will say because I go back and forth on DCFs, but here's like one of the things someone said to me that really stuck with me is DCFs at least lets you understand what the drivers are and helps you say like, okay, if these so for example, with Paylocity, what I want to look at, you want to be saying like driver's going to be, you can make it like derivative of the number of SMB companies, in America. And like Paylocity is kind of a hard one to like do that off of, but you can kind of see what I'm saying is like with a lot of these with Carrier, for an example, you can say how many, like what's going to be the growth rate on their different products. And that's going to drive into what's the margin on those products. Where does this come out in the end? I think that's
Yeah,
useful because it helps you, even if you don't know, um, like what the right risk-free rate is and everything. Which I think is like kind of it's all like personal preference, right? Because like some people use
yeah.
like the 10-year treasury, some people like Aswath. I think he uses like the 1 month tip T-bill. Like he uses
Yeah.
something like super.
Technically, I think I should be using the 5-year treasury if I'm based off of a 5-year exposure. Like, so that just like makes sense to me, but I just haven't updated it yet.
Which is ironically going to make your risk curve actually like because normally that would make it, your stocks become a higher like purchase point, but in this inverted system, it's going to actually make the purchase point lower. Should be funny,
Yeah.
but so
Oh man.
um,
But yeah, no, I think there's so much nuance to it, and like because I'm basically doing the same exact thing. Is I'm just kind of looking like similar to margins and growth and where I believe margins could get margin expansion or contraction, and then multiple expansion or contraction. So it's almost like a hodgepodge of things.
mhm.
Um, and somebody kind of asked me previously, like I think we are talking about a reverse DCF, and I was like, well, I kind of already do a reverse DCF built
Yeah,
into the model. Like if I just don't do anything, it's all based off of like previous historical data, and what the market has valued the company at in multiple wise previously. So yeah, I don't know. It's turned into something that I like a lot, and I'm just constantly like tweaking it here and there.
It goes back to when it comes to like there's people in the market who are traders and they have a trading system and it works. I'm not a trader, but I know that there are people that do that and it works. It's about if you're a fundamentals investor, like find your system, and if this is how you can like understand companies and evaluate them, and then it gives you like a baseline that you can go back also and improve upon and say, oh cool, like this worked, so I'm going to keep using it.
Yeah.
Or oh shoot, this didn't work, what went wrong?
Yeah. Well, and the nice thing about like being a part of a community or multiple communities is you can be like, hey guys, I'm checking out this company. This is
Mm-hmm.
like basically what I'm getting for it for fair value and stuff like that. And you can almost kind of do result comparisons and be like, okay, am I like crazy off? Or
Yeah,
sometimes,
exactly. And then
like,
someone can like point
sometimes it
something.
like it's easily explainable, like different KGAR targets or something like that, or they're in line. So it's kind of self-checking that way.
Also, like we all do, we overlook things. Like with Goodyear, I was really confused because I like one of my things I didn't understand on the Elliott management pitch was like how they can sell their stores at 13x EBITDA when their company's trading at 6 times EBITDA. And then Fabio was like, it's because they own the land, right? It's like, oh shit, that makes sense. Okay, I totally like overlooked that because I'm looking at this, I'm like, this is a low margin part of their business. Why would they sell it at a premium to their current business model? I'm like going through all this stuff. He's like, because they own the land. I was like, I don't know how I missed that.
Yeah.
And so
there was something else. Oh no, I was doing a rough eval on Disney the other day. Just looking at it. Huh? Yeah. No, and basically like that's what I came out with, but the thing that I was thinking about after I ran this eval, I was like, am I should I be trying to value the IP that they have? And that gets a lot more complicated.
Oh yeah. Well,
because I'm like, if I'm adding in the IP that they own, but honestly, like, what is the true value of that IP? It's probably only the true value of the cash flow that the IP can generate in the future. So maybe I'm overthinking it, and I should just really ignore maybe the hard value or the static value of the IP and just still go off of what I could think the IP could cash flow in the future and how it's valued that way, I guess. So I guess I'm just talking this out right now. So
this company is just like, I can't get. Have you seen this Snow White stuff? Like, not only does their costumes.
I didn't even. I see random stuff that gets posted and I'm just like, okay.
The thing is, like, one, it looks stupid. You're like, wait, they're supposed to be dwarves, not like the Beverly Hillbillies of wherever they live. Like, and then their costumes just look cheap. Like, I did like acting in high school, and that's like the kind of costumes we were in like our high school plays. It's like, what the heck is that?
Maybe they forgot to do like, I don't know, the photo shoot, and they're like, crap, let's just
and
get stuff together.
And I don't know. It's just like one of those things where I know. Well, I keep on it because it's all about like an agenda and sending out like we have to make these points in our movie, which it's fine if you have movies that make points, but like every single movie, it's like maybe it should just be entertainment.
Yeah,
that's kind of where I land, and it's just they've just taken so much IP. I don't know. It's just weird.
All right.
But anyways.
Well, I think we're gonna end it. It's been an hour 4, so thank you everybody for joining. Hope you enjoyed it, and yeah, we'll catch you next week.
All right.
Bye.
Thanks for having me on.